Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope I am audible to you. Sound is okay? Fine. Let me display the PowerPoint presentation. Asian session live market analysis on December 19th between 5 and 5:30 GMT. We'll be reviewing the market using the live market code page. Let me give the link for the same. I'll also focus the camera over that of the live market code page. Currently, euro is trading around 1.2992, 1.2994, 1.2984 is the low, 1.3047 is the high, 51 pips negative net change is seen. They opened flat and made a nominal drop below that of the initial low set around 3:30 GMT, and they are just firming it up now. In the case of GBP, 1.5481, 1.5485 are the current levels, 54.67 is the low, 55.44 is the high, and 63 pips negative net change is seen. When GBP is showing more negative net change, you come across Euro GBP has gained nominally, it has come to about 83.90, 83.93 level. Then in the case of Yen, 77.94, 77.97 at the current level, 77.74 is the low, 78.15 is the high, about 19 pips positive net change is seen. So Euro GBP and USD Yen are showing the USD gaining move to start. Then also in the case of CHF, it has gained nominally about 21 pips, but when Euro has lost about 51 pips, CHF has gained only about 50% of it, about 20 pips. So currently trading around 93.79, 93.82 level. 93.61 is the low, 93.98 is the high, 20 pips positive net change is seen. So here again you come across nominal USD gaining move. Coming to that of the commodity pairs, USD CAD is trading around 1.0403, 1.0407, 1.0366 is the low, 1.0413 is the high, 22 pips positive net change is seen. But in the case of Australian dollar, it has dropped more when compared to Euro and GBP, is showing about 72 pips negative net change, currently trading around the psychological level 0.99 area, 0.9909, 0.9912 at the current levels, 0.9902 is the low, 0.9990 is the high. So from the high, they just made the drop almost closer to the 99. So what could happen during this particular day? Let us use the forecast derived from the algorithm and also do the market reading from there onwards. So let me focus the camera over that of the PowerPoint presentation. During Japanese session, they are expected to swing and firm up towards close. Now they are making the dip. So the dip, what we have seen in the case of Euro GBP and more in the case of Australian dollar, and they are expected to lead to that of the firming up move. Again, there could be a dip during the start of the European session, and then the rise moves could happen. So they are expected to gain the levels considerably well during that of the mid-European session. Till this time, they are expected to create the uncertainty in the market, and thereby the traders might think that it is a bearish market and the Euro and GBP could close lower for the year end, because there are only 2 weeks left out from today, and people might get that impression that Euro and GBP could make further downward move because of the year end pressure. But actually the players just dropped and bought the positions at the lower level, and they are expected to quickly gain the levels and close it at a higher level during the end of the year. Then US session, they are expected to swing and rise without much of a dip, and so this rise could continue for subsequent days of this particular week as well as next week. So year-end rally may commence soon from these current levels, and 2012 is expected to show more USD weakening moves. That's what my algorithm says. And we could come across surprise gains in the case of Euro GBP and also USD Australian dollar and also USD CHF and USD yen and USD Canadian dollar are expected to make gains during the year 2012. So before that, you'll come across more gains in Euro and GBP during this particular week as well as next week. This is what the algorithm says, and there will be dips on a daily basis in order to create the uncertainty so that anybody is taking the positions at the bottommost level may be discouraged to hold the long, but ultimately they are expected to gain the levels, and it might look next to impossible at the current scenario, and you know that the players create the market sentiments and act against that of the traders when they are committed the positions. So keep that in mind and then try to trade, because every time they are created the highest level, the uncertainty, and the lowest level, another uncertainty, and that is how they earn money from the market. With regard to the initial lows and the highs, Euro formed the low 1.3000 as the initial low during 3:30 GMT, and subsequently they formed the new low 1.2984. Currently, you come across the live market quote page, and they are expected to go above that of 1.3000 level soon. And 1.3047 is the high, which they are not disturbed. And GBP 1.5483 was the low, and then from there they came down nominally to 84.67, and they are closer to go above that of 54.83. So these are all the small dips to create the uncertainty, and then subsequently they are expected to gain the levels, because after forming the new low, they are not breached the low and so forth, and they are expected to breach the high, initial low now. Then 1.5544 is the low, high, and they are expected to breach the highs what they are set today by mid-European session onwards. Then USD CHF, and it has gained the levels 93.61 was the low and 93.91 was the initial high. They breached the high and formed 93.98 currently, and trading slightly below that. And they are expected to suddenly gain the levels during the European session to start with, then followed by that Euro and GBP could gain the levels. So a small dip in Euro and GBP could trigger the denominator currencies to gain the levels, but after the gains in the case of denominator currency, the numerator currencies could gain, but they are not expected to lose much of the gains in the case of denominator currencies at that time. This is a strategy they are using it now in order to gain the levels in the case of the crosses. So keep that in mind. They handle majors as well as the crosses alternatively. For that, they are trying to create this sort of moves in the case of majors. Ultimately, they have to make the moves in all the four majors and the two commodity pairs in order to bring in the swings and volatile moves in the respective crosses. Then in the case of yen, 77.74 is the low, 78.15 is the high, currently trading around below that of the psychological level 78, and they are also expected to gain the level slowly during the day. And Australian dollar 99.03 was the initial low, and they formed 99.02, 1 pip below the new low, and then subsequently gained the level to 99.09. You know that the commodity pairs lead the rally and lag behind. They made the downward move, and then it has come above that of the initial low. So then the other currencies are expected to follow the upward move. 0.9990 is the high, and at the moment it looks very far off, but during the day you will find that they could reach the high and above, and again start trading above that of the parity during this particular season. Then USD CAD 1.0366 is the low, 1.0406 was the initial high. They breached the high and formed 1.0413 as the new high. Now you can understand they are holding above that of the psychological level 1.04. Now you find that they just breached the low in the case of Australian dollar by 1 pip, but breached the high in the case of uh, Canadian dollar about 7 pips. And so they are expected to gain in the case of denominator currencies as well as the numerator currencies. So whenever there is a small dip in the numerator currency, they could make more gains in the case of denominator currencies like USD Canadian dollar, USD yen, and USD CHF, wherein the respective currencies are in the denominator position. CHF is in the denominator of the ratio, yen is in the denominator of the ratio, and again Canadian dollar in the denominator of the ratio with that of US dollar. Whereas the other currencies, Euro, GBP, and Australian dollar are on the numerator side. The denominator is the common currency, namely US dollar. So you find that the players have created the uncertainty just by making a small dip, and now Australian dollar has come above that of the initial low and currently trading around 99.12, 99.15, and they are expected to quickly gain the levels towards close of the Japanese session and also during that of the European session. It may not make a drop, but Euro and GBP, they could just retest the low what they had set as a false move and then start gaining the levels during that particular day. So here you find that week beginning false moves are restricted only to few hours during the start of the day, and in coming days you will come across that during start of the day they may create a bearish feel or give that impression that the traders are looking profit, but ultimately the players are buying at all these levels when the traders sell, and then we will understand their intentions, how they created the bearish feel and accumulated the positions when the traders freely sell at the lowest level, and later on quickly gain the levels and try to distribute the positions when the traders become very bullish at the higher levels. This is what they do it on alternative basis, and now we'll come across the commencement of the year-end moves. So let me minimize the PowerPoint presentation and focus the camera over that of the Eli Market Quote page and take up the questions which are asked here. And Yash has got a question. What about USD CHF move today? USD CHF has gained the level last week and to 95 and then came down to 93.50, about 150 pips, and then started gaining the levels, and they are expected to quickly gain the levels during that of the late Japanese and also the early European session. Then afterwards they are expected to make the either way moves around that of 94, 94.50 area of the day and allowing Euro and GBP to go up at that time. Tomorrow onwards, we will come across more gains in the case of USD CHF. Then, if it is seen blank in the presentation, I'm not very sure whether others have seen this slide, what I have shown. Probably you may have to refresh and see. And Kathy, low liquidity in the market will start within a few days. Can Euro and GBP dip another few hundred pips and gain after New Year? See, that is what everybody anticipates. But, the players take certain occasions, the thin volume to their advantage. And so we cannot simply say that thin volume will affect the market moves all the time. The thin volume can give subdued moves in the market on certain times, and on certain other times they can bring in more volatility. If you see, for example, on a daily basis, the volume in the case of Euro is relatively very high when compared to that of GBP and Australian dollar, and volume is very low in the case of USD yen. USD CHF has got a better volume, and Canadian dollar also has got it has got a lesser volume. That is what on a daily basis you come across. And also in the case of current crosses, you find still lesser volumes. So Euro has got the topmost volume in the market at the moment. So when the scenario is like that, you do come across that euro is not making very big move, whereas other currencies are making volatile moves. And sometimes you come across the crosses making about 100 tickets, especially euro GBP. So the volume does not determine a subdued move all the time. It can bring in volatility in a very aggressive way, or sometimes one-sided move in an aggressive way. So always keep it in mind that volume cannot be correlated directly to the other market moves all the time. Such thin volume can create illiquid condition or create a scarcity of position, and when the when the players started accumulating or gaining the levels, there may not be any sellers. Then it can jump just like that. So don't be of the assumption that when the volume comes down for the year end and the market moves are to be reduced. And if you see the previous year's charts on the data pertaining to that of the last month of the year, 2011 or 10, 2009, 2008, etc., they made very quick moves, and they are known to do that year end. Then new year beginning, obviously the traders will become cautious for the new year. What is there in the card, they will try to read it, and the players may not give a chance for them to accumulate the positions at that time, and they are expected to make again volatile move. So similar to that of the month end time and the month beginning time, you come across the monthly trend reversals. Similar to that, you find year end time and the new year time, the yearly trend reversal moves. The yearly trend reversal moves are very, very wild and volatile moves. Keep it in mind. And that is why when they have made the drop initially during this particular month of December, the first 2 weeks, I have not changed my view, or I have not become panicked that they might drop further down and things like that. Because I know very well when they initially make a drop, then subsequent 2 weeks they are expected to make the rise. Sometimes they just finish it in 1 week, or sometimes they finish it in just a few days of the first week. It all depends upon the traders' pending positions. So now they have taken 2 weeks to drop and accumulated huge positions. I am very, very sure that another 15 days of this month and also 2 to 3 months of 2012, they are expected to make aggressive gains and try to do the upward stop and try to do higher level consolidation with upward stop and in order to book profit and turn short in the positions. Then later on we will understand, okay, they have been buying it, but every time we realize it, once they gain the levels, but at the time of holding there, we don't get the courage to buy. That is market. Then both Euro and GBP dip another few hundred pips and gain after New Year. If both pair cannot rise few hundred pips in the few days, I think dipping is inevitable. Yeah, probably that is your derivation. Let us see how exactly which can happen during this particular fortnight. Then Rena, does the European session dip expected to breach the current low? They may not breach the current low in all pairs. Probably in 1 or 2 pairs they may breach the low by a few pips, about 10 to 15 pips. Probably GBP is the sentiment creator, and they could use GBP for that. Australian dollar, they have done it about 90 pips from that of the high, so they may not use it. And euro, they may dip nominally and a false move below that of the psychological level 1.33 they may do. But GBP is the candidate, they use it normally to create the sentiments in the market. Then dip expected to breach the current low of 75 pips, negative net change. I think Rina is referring to that of Australian dollar. Australian dollar is expected to gain again. Able. They expect gold to go down to 1500 by 2012 and euro to 1.25. To your surprise, you will be seeing that euro is going to the 1750 again, and it is expected to consolidate around 1780 to 1800 level during the early part of 2012, and later on, euro and GBP are expected to make a drop, but gold and Australian dollar are expected to make a very big drop in the month of March, April 2012. Then during that time, euro and GBP are not expected to participate, and they are expected to make an upward move. Then all good. What is your opinion about spot forex and forex futures trading for retail traders? See, there are different products available in the forex market. The contract of difference and also the options and the futures, etc. Everywhere, you know that the risk part of risk is equal or more in the case of the derivative market. Because the spot market, say for example, is gaining more and more, simply in the options market, they may say that market is discounted. It may not go up. So in the futures market also, they can bring in a variation, similarly in the case of CFD. So whenever there is a quick rise or a quick drop, you may not see that the derivative market participates similarly. So you do come across variations with regard to the derivative markets like CFD, contract of difference, and also the futures and the options market. But what I suggest is, if you could assess very well the spot market, then try to focus on the spot market. It might think that options market is very less riskier when compared to the spot market, so that we can take more positions. So when they induce you to take more positions, understand that they are giving excess leverage for you so that you will not be able to come out with a profit. You might think that instead of taking, say, one lot euro in the spot market, you can take about 5 lots of options. But in the options market, they try to see, and you have to necessarily close the positions before the option expiry. And they do the moves in such a way, in order to carry the options market, they make volatile moves in the spot market and bring down options market or take up very severely in the options market. And at the time of expiry, if you try to hold the position till the end of the expiry, after taking the positions, you will invariably see whether it is a put option or a call option, you will end up in loss. So that is how the markets are being structured. So it is a game plan, like the casino effect. They make it as a real casino there. Then Vinay. Are you expecting a gain of 150 pips today? Yeah, there is a likely chance that euro could gain today. And from that of the mid-European session, it could become visible. Then Francisco, which level could euro reach for your end? See, in a week they can gain about 350 pips. And if they gain 700 pips in 2 weeks, it can go up to that of 3,700 to 3,800 level. But there are occasions wherein they have exceeded these levels because during year end they take the thin volume condition to their advantage and try to create either artificial demand or artificial supply to that of the market. So in such scenario, they can gain even to 900 to 1,100 pips. Then Shan, your view on yen crosses. So yen crosses at the moment, because yen is holding nominally with a narrow range swing, So corresponding moves are seen when euro drops, euro yen also drops. When euro gains, euro yen also gains. That sort of moves are seen in relation to that of the pip variation. So if euro gains about 50 pips, euro yen also gains almost about 40 to 50 pips. That sort of moves are seen currently, and they are expected to gain the levels in the case of USD yen very soon because they cannot hold it. And if they hold it like this for several years, then people might lose interest in trading yen, and later on attracting them might become very, very difficult, even though they earn quite a lot from that of the yen borrowers who have to pay to nose the loans back to Japan. But that cannot be the only point of earning. They have to earn from the market as well. So they are expected to bring in more volatile moves soon in the case of USD yen. In Muri, did your algorithm take into account the economic crisis that is seen all over the world? See, if you single out the economic crisis, then you can talk probably hours together with regard to the economic crisis in Europe. Then you can talk hours together with regard to economic crisis in US and also in Asia and Japan and things like that. Everywhere they are worried about the economic conditions and people are threatened of recessions, etc. And which is the worst part of it? Will you be able to assess it? Because these parameters are studied in relation to that of the previous years. So obviously when you try to relate it to that of the previous years, then you might find that they are dipped. The productivity or any other factors pertaining to the economic conditions, you might find that they are decreased. And which decrease is better when compared to that of the other decreases? It is something like the comparing of the negative situations. See, normally the comparison of the negative situation might look relevant on a theoretical point of view, but practical point of view, no negatives can be compared. And probably if you know more about mathematics, then you will know about it. But what they are trying to do is try to exaggerate certain negative aspects pertaining to economic crisis, and that is bringing in certain amount of uncertainty. And the players have to necessarily play their cards effectively and give so much of the panic to that of the traders that the economic condition in Europe is very worse when compared to that of US. And 6 months back they have been talking about the double recession in US, but they are not talking about it. When they start talking about it, then people will forget about European crisis. So this is how, when the media is used effectively to continuously chant the crisis talk, so on a daily basis, then people think that, okay, European economic condition is really bad. That's what they feel. So this is a strategy. They use it. So you and I are also talking about the economic conditions. But the algorithm indirectly takes this particular conditions, and that is why, it is giving an explanation that 2012, the US dollar is expected to undergo severe setback. And in the beginning of the year 2011, I was telling you that US dollar gaining time is ahead in this particular year. But the gaining moves are all over. So they have to go back to that of the other major gaining time frame now. Almost the year is going to come to an end. So these economic crises, I won't be knowing on what basis they are going to talk about this sort of economic conditions. From time to time, they might be talking about the non-performing assets of the banks, or sometimes they may say that productivity has come down, sometimes the employability has come down. Every time they will try to take in new concepts and try to explain to the common man. So common man things in a very complicated way. Oh, this is the way that employment is being generated, or the employment is not being generated in the country. But when you go in for an employment, those things will look rubbish. Ultimately, it is a question of your performance to get employed. So they try to talk so much so that the people think that they are real and able. Are you teaching your algorithm to in your website? No, not at all. Because see, I do not want that algorithm to be misused by anybody in the world. So I am not teaching to anyone, and only I can explain how the market reading has to be done, how the trading strategies are to be used, and they are equally important. The algorithm can give a very, very long-term perspective of the not only the market, even the economic conditions of various countries and also of the individuals, etc. So I do not want that to be misused by anybody. I'm not after money. Then Jason. Euro CHF at the current level is a good buying opportunity. Is definitely below 1.22. It's a good buy opportunity. Definitely will come across the gains happening there. FT. What do you think about Australian dollar down? Australian dollar is expected to gain for some time because near again they have to go above that of the parity part of it and then started coming down. So it has drastically dropped from 1.10 to 99 area, and it has to make a pullback in order to create the bullish field and then start making the slide and come to the normal trading zone soon. Around 0.88 area you might see in April 2012. In Vinay, would you say that would you say that your algorithm is leading by about 3 weeks? Yeah, see, any forecast has to give it in advance what is expected to happen. So it might appear that it has just explained the turnaround very fast, whereas the turnaround is taking a longer time to do it. But ultimately you will see the turnaround happens here, and the more the time it takes on the downside, it is going to take more the time on the upside as well. Keep that in mind. High level consolidation with upward stoppment might prevail for about 3 months afterwards. Because the players do all those things depending upon the traders committing positions. Then DTPT. What is expected of Australian dollar? What range do you expect Australian dollar to today and tomorrow? Australian dollar is expected to trade in the range of 99 to 1.02 for some time. Then go up to 1.04 area. Then Scott. I take my initial highs and the low as the highest high and the lowest low between 230 and 330. But there is always difference from yours. See, if you take it from the live market code page, you might see that some of the highs or the lows might have been taken from the previous day. So the interbank treasury set the initial low and the initial high around 0030 GMT based on the previous day 30 minutes average levels. Sometimes it might, or on that day from that of 1 GMT or so, you would have seen that that particular high has not been reached at all. So you may think that it is varying from your calculations. So when you note down this around 330 GMT, you will find, or exactly by 330, 335 GMT, you see what is the low and the high, you just make a note of it. Sometimes, sorry, in the chart, you may not be able to find that, because if you look into that 15 minutes chart, the highest level, the last 15 minutes trade, it will try to take the average and fix the point. Then you may not see the exact levels. You find the difference. enable. Therefore, you expect USD to strengthen even more into. Now, explained that USD is expected to weaken in 2012. Hope you are able to understand. USD is expected to weaken. That means Euro and GBP are expected to gain more levels. And the denominator currencies are expected to gain the levels. There you could come across USD gaining moves nominally. That is nothing but the reversal from that of the multi-year trend reversal. And TY. Can we expect Euro to gain back all its losses last week in the next few days? Yes, it is expected to gain. And suddenly you could come across such gains happening in the market. And they can use any data release or any of the other speech, etc. as a trigger, and they can simply reverse it. And that is how they have been doing in the market. They create the sentiment and act against that of the traders. Enable. They expect Aussie USD to go to 80 area in 2012. Yes. Not 80. It will go to 88 area. As far as Australian dollar, I think you have just made the comment in pertaining to Australian dollar. Okay. Australian dollar, it has gone earlier, you know that it was trading in the range of 0.90 to that of 0.65. So that is the range in which 3,000 pips. That was the range in which Australian dollar was making the swings earlier years. Then subsequently it went up to 0.9095 and then 1 above parity and went up to 1.10. So that is a multi-year trend reversal. They have done it in Australian dollar. And when Euro was around 1.60, you just refer to Australian dollar where it was. When GBP was around 2.11 in 2008, where the Australian dollar was, it will come back to the same level. Because it has done the multi-year trend reversal and it will come back to the same level. But Euro and GBP are expected to gain the levels during the year 2012 and Australian dollar may not participate such a big rise. So what will happen? The commodity pairs lead the rally and lag behind and they may just simply hold. That is what happened in 2008 when Euro and GBP were gaining substantially. Australian dollar was not participating that much. It was not going above parity. Similarly, when Euro and GBP have made nominal dip, we have seen that extreme drop in the case of CHF and Yen. Now they are reversing from there. So this is multi-year trend reversal in the case of USD Yen, USD CHF and also Australian dollar. Earlier in 2008 to 2009, they did multi-year trend reversals in Euro GBP and USD CAD. So they have taken 3 pairs at a time and done the multi-year trend reversals. So this time they have taken 2 denominator currency and 1 numerator currency in India, Australian dollar. So they are expected to show the USD gaining move. In the process, what will happen? Canadian dollar has come down and it is expected to gain back again to 1.05, 1.10, etc. But Euro and GBP are expected to gain the level. So that is why I always explain or suggest to that of the traders that focus only on Euro and GBP as far as your intraday trades are concerned because they are expected to bring in very good volatile moves either way. Whether you have a buy around 1.30 or buy around 1.35, if you wait for a few days, you will be able to see profit at that. Unless and otherwise, you have got extreme or you are over-traded. Suppose you have got only 1 mini lot or 2 mini lots and simply holding it, wait for a few days, you will be able to see profit. But in the other currencies, it is difficult. Holding for a long time may lead to more losses. What about Kiwi Australian dollar? Kiwi Australian dollar, now you find that Australian dollar has made a drop of 62 pips and New Zealand dollar has dropped only about 31 pips. So it is holding it in order to handle Aussie New Zealand dollar cross, but it is expected to equally participate along with that of Australian dollar. So when Australian dollar is making the drop later in the month of March 2012, New Zealand dollar is also expected to do similar moves. Then Vinay. After the gains in Euro and GBP for 3 months, will they reverse current level? They may not come down to these lows. So they will do the middle consolidation and upward stop and then take up to the higher levels. So higher levels. So now we are at the bottom. Lower level consolidation with a frequent downward stop. Then quickly take it to the middle level like 1.38 and 37 level. And then do either way stop and then take up to that of the higher level like 1.44, 1.47, etc. with a upward stop. And that process may lead to 1.49 to 1.52 in the case of Euro. Then Vinay, do you teach all of this in your professional trader course? Yes, I teach all how the market reading has to be done using various parameters which are used by the players. And also, our reading can go wrong. So what I suggest, use the trading strategy parallelly. So without taking much risk, you should participate in the market. So risk limiting factors are very essential while trading. So that also I simultaneously teach so that you will be able to use both the market reading as well as the trading strategy to limit the risk and maximize the profit. But the algorithm, I don't teach anybody, but I give the outcome of the algorithm in the form of forecast. That forecast will act as a guidance for the market reading. Then DDPT. What is expected of Singapore dollar in 2012? Singapore dollar is expected to weaken at this time of 2012 in DDPT. What is expected to USD yen for the week and for the year? USD yen is expected to come above that of 80-83 area and then quickly jump into 90-92 area very fast in next year. We'll be able to see that. And you know that USD CHF has come almost upward after making the multi-year moves, and still it has to go above parity and make further moves on the upside. But now USD yen is lagging behind. It is still closer to that of the all-time low what they have set, and suddenly you could come across a one-sided rise. Need not be in the form of intervention. It could be suddenly a demand for that of the US dollar against yen that can just take up USD yen to the higher levels. Okay. So no more questions. Okay, then Francisco. What do you think of CNY? Maybe weaken. Okay. With regard to Chinese yuan, and it is being pegged, probably they could strengthen Chinese yuan during that particular time frame, even though in a pegged condition. TY. Is it safe to take a long positions, especially those who are doing currency conversion trades? They can definitely take long positions in Euro and GBP and see the benefit afterwards. Okay. Only of all the experts at FX Street, you are the only one who is optimistic of you. See, don't say like that. Based on the current situation, anybody can create the sentiments. But I am viewing the long-term forecast with the help of the algorithm. Because of that, I am optimistic about it. If you have the ability to foresee, then you will not lose your faith. It is simple. Then DDPT. Do you expect any much more drop in USD? Not much of a drop is expected in CHF. Then Abel, what is your opinion on silver? Silver around 28, 29 area, one can buy. It will go up to 33 again. Okay. Let me go back to that as the PowerPoint presentation. So expected market moves for today. Swing and firm up moves are expected during Japanese session. A small dip and a rise are expected during the European session. US session could show more swing and rise moves, and the year-end rally could commence soon. And you might be surprised that why there should be a year-end rally. That is how the players do it and prepare themselves before the onset of the new year and try to make aggressive moves during New Year or volatile moves during New Year 2012. Probably 2012 will be welcomed with an optimistic note of USD weakening moves. So, with regard to the initial lows and the highs, Euro just breached the initial low, came down and come above that of the initial low. GBP also has come above that of the initial low, 1.5483. And USD CHF breached the high and came down below. They are expected to make a downward stop and then go up when they do like this. And in the case of yen, they have not breached the low or the high. In the case of Australian dollar, they breached the low only by about 1 pip and then started gaining the levels. And in the case of Canadian dollar, they breached the high and they have come below that of the initial low. So they could make a move closer to that of the low, the initial low, and probably make a brief downward stop and then go up. So whenever they are near that of the low or making a downward stop and try to buy in all the 6 pairs, you will be able to book profit during the day or at the end of the day. So let me take this opportunity to thank FX Street for the kind permission to present the webinars, and also you people who have come here to listen to my webinars. So we will again meet tomorrow and review the market on a daily basis and see where they are taking up the markets, and also related to that of the algorithm derived forecast and see how far the market is moving in line with that of the forecast or against the forecast. So see you tomorrow. Until then, bye.